Welcome to Upticks. I'm Jake Falcon.
And I'm Corey Bittner. We're the founders of Falcon Wealth Advisors and your co-host for Upticks.
Today's our 52nd episode, Money's Influence.
We're talking about fear and greed, growth stocks, and questions worth asking.
Okay, Corey, welcome back to the show.
It feels good to be back.
I bumped
it's been
you.
A few weeks here.
I bumped you for 2 weeks.
That's all right.
2 shows there.
Gotta knock the rust off.
Yeah, well, we switched it up. We decided to start having some guests on the show just to liven up the topics a little bit and bring on some other subject matter, people that are out there that are doing different things besides just you and I talking about the same.
We don't want it to get too stale.
Right. So we freshened up.
It's been good too. I liked watching them.
Good. So I'm glad you've enjoyed it. But I did want to bring you back this week because I wanted to talk about a few very important topics with our audience. And the first one being fear and greed. We study this a lot as being financial advisors, and it's a big deal with humans because it's a big driver of behavior. And I wanted to talk about both of those as it pertains to financial planning and things and discussions that we have with clients all the time. So why don't we kick it off with fear? Maybe kind of give some of the examples of fear for clients, and I'll go into that with myself as well, some notes that I've written down here.
I think as far as fear goes, with our practice revolving around primarily retirement planning, I think one of the most obvious fears that people have is, am I going to run out of money?
Absolutely, it's a big one.
And in my experience, the psychological impact of someone who's retired, who's already saved all the money they're going to save, taking distributions from their account simultaneously with the stock market that's falling. In other words, people see, I'm pulling money out of this account, the stocks are falling in value. It's almost like a double whammy against my account value. Despite how we have their accounts set up so they're not selling stocks every time the market goes down, I think that's probably the most common fear that people have, and it's a hard one for them to sort of wrap their mind around.
Yeah, and I would say that the best way to overcome that would be comprehensive financial planning.
Yes.
And regular conversations with your advisor. So with our clients, and when markets are up like they've been this year, fear isn't kind of there really for most people. Their accounts are up. Typically, they're making a lot more money than they're spending. So their distributions as a retiree aren't impacting the overall plan. But you're exactly right. When we enter these recessions or bear markets, which one certainly could happen, and they do happen, that's when people or fear kind of sparks back up. But the number one thing that we do for our clients to alleviate that is that we meet with them twice a year to review that entire financial plan. So we're looking at the 30-year projections and we're seeing, do they still look healthy or not? And if they don't, the good news is we can go in there and make adjustments or have conversations. On top of that, two meetings per year, we're actually calling our clients 2 times in addition to that. So we're really communicating with our clients basically quarterly, going over their plan, going over their investments, checking in to see if they have any questions. But that's probably the number one thing that you can do to help yourself. And certainly if you're listening to this or watching this and you don't have a financial advisor and you're worried about that, that's really what Corey and I and Falcon Wealth Advisors, that's really the big thing that we do, is we focus so much on planning so that we can, virtually eliminate that fear. I mean, there's always going to be something probably out there. That's just part of being human. But the idea is if you do in-depth planning, you can really take away some of those hesitations or some of that anxiety. Now, there's a big problem, though, that I wanted to talk about in addition to this, is in the industry, a lot of salespeople out there, they use fear to acquire new clients. And that's a problem. It would be like if your dentist was out there advertising all the time, like, cavities are bad, you can lose teeth, but they don't do that, right? Or eye doctors talking about the importance of having good vision or not squinting or whatever. So the problem is in the financial industry, there's still a lot of salesmen out there and they're using scare tactics to acquire new clients, and that's what you have to be careful of. Maybe you can comment on that a little bit of what you've seen regarding, other professionals or quote unquote people calling themselves professionals, but they're actually salesmen using fear as a strategy.
The first thing when you started talking about that I thought about was a commercial that runs on CNBC all the time, and so if you could picture this visual, it's someone walking either in, somewhere like Chicago or New York City, a big city, and it's just this horrible storm, and everybody's just getting soaked and they're trying to cover their heads. And there's this gentleman in a suit who's just walking comfortably through the storm like he has nothing to worry about.
Right.
And it's a metaphor for some type of investment product. I think it maybe was maybe it was a bond strategy or an annuity or something like that, that just was talking about how, when when things are horrible all around you, if you go and buy what it is that we're selling, you can walk confidently and don't have to worry about this kind of stuff. It's just
that's an example, right?
Piggybacking what you're talking about.
Yeah, so you have to be careful. So I guess the best tip there is don't always believe what you hear. A lot of other, advisors might look at somebody else's financial plan and say, this is wrong, you're going to run out of money, right. Or you need insurance, or you need long-term care insurance, or there's all these different things that advisors use out there. And again, they're just salespeople. So you have to be very careful. When you're looking to work with an advisor, you should just make sure that they're a fiduciary. That's a big piece. Now, some will say they are fiduciaries, but you have to be careful too, because they can be fiduciaries and brokers, which is a whole nother topic for a whole nother show. But the idea is that you want somebody that's a fiduciary all of the time with all of your money. And the idea is then they're going to have your best interest at the forefront, and they're not going to look to scare you into selling products. So you just have to be careful that you don't always want to believe everything that you hear. Just like a car salesman's going to tell you what they want to tell you to try to sell you a car. Sadly, a lot of financial professionals are that way as well. Now, the industry is working to clean that up a little bit. I don't know if it's going to happen because, again, we're talking about millions of dollars at stake if they do try to differentiate the two. And I'm not saying that salespeople are bad. I'm just saying you have to understand who you're working with. And you can't, as a consumer, you have to be empowered to say, okay, is this person acting as a salesperson or are they acting as a fiduciary? And that way you clearly understand what's going on. I think the problem is a lot of people are naive and they just want to believe what they hear, and that's when they get ripped off and they get sold maybe a product that they don't necessarily need, or they get duped into managing their money incorrectly.
Exactly, because the reality is if it sounds too good to be true, it probably is.
Right.
And if somebody is positioning themselves as you're going to run out of money, everything's going to be bad unless you work with me, I'll be the one that saves you and helps you out here. That's not what you want to probably look for.
Yeah, good point. What about greed? So, not necessarily the opposite of fear, but there's greed. With the markets being up, over 15% this year, maybe some people are out there and they're saying, why aren't I making 20? Why aren't I making 30%? Maybe you can talk a little bit of greed, some of the greed conversations that you have.
I think interestingly enough, I personally haven't had a whole lot this year, and I think that's probably just because we're coming off of what was a bad year last year.
Good point.
I think a lot of people are still skittish despite this. The strong market performance of the first half in 2019, people are still a little skeptical because they remember where we were at 6 months ago. But I can't speak more generally as far as greed goes. You and I have talked about this before. When people think that they should be making 10 or 15 or 20% per year, and when people start to think that the market owes them something, or that they should be able to reasonably expect what's going to happen every single year. And if it's not good enough, then I need to be doing something different. That's when that needle starts to swing the other way.
Right, and that's a good point. And so that was what I was going to exactly say, is that you shouldn't expect years like this all of the time. They don't happen all of the time.
Right.
And if somebody's promising you that they're going to make you 10, 15, 20% a year,
right,
you want to be leery of that as well. So good years are definitely fun in the market, and we love to participate in them, but just recognize that it's not going to happen all of the time. And then also, if you're working with an advisor that's saying that their fee is quote unquote free, or that they can lower their fees, you have to be wary of that also. That, like you said earlier, if it's too good to be true, it probably is. So don't get greedy on your fees. We think an appropriate fee is somewhere around 1%. That's pretty standard in the industry. If someone's saying they're going to charge you a tenth of that, 0.1%, I would be leery, right? Because again, it's like, wait a minute, you're charging me a tenth of what all the other advisors out there are doing? Why? Right? And then why? Maybe they're trying to buy your business, right? Or maybe they're going to discount it for 1 year and then raise the fee on you. Or if they certainly tell you something's free, that's a big red flag.
Maybe there's somewhere else that they're also making fees that you just don't see.
Yeah, they just may be hidden. So again, you need to be careful of that. Again, the markets are going to go up and down. We're going to have good years and bad. And then just be careful of advisors. Again, we feel that you get what you pay for. I wrote a really good blog about this. That you don't necessarily want to just pick the cheapest advisor out there because you might not be getting the best advice.
I like that you just said I wrote a really good blog.
I did. It's out there on our blog. You can check it out on our Falcon Wealth Advisors content section.
I'm just giving you a hard time.
It's out there. All right, good. So let's switch gears a little bit into the investment portion here, and let's talk about growth stocks. Corey, why don't you throw out the definition of what a growth stock is?
When you're thinking about what a growth stock is, it's really a company that is basically reinvesting its profits, typically into itself, in an attempt to make that company grow that much more quickly.
Yeah. So and I guess the definition would be that they grow their earnings faster than the average. So again, these are companies.
That's what I should have said.
That's fine. And there's companies that typically don't pay a dividend. So the whole idea is that the investors buy into these stocks because they want the stock price to go up. It's that simple. And they're typically your drug companies, retailers, your tech companies are typically growth stocks. Again, they're out there and we're looking for the stock price to go up. Now, we don't think a portfolio should only have growth stocks. There should also be something called value stocks in them. But we use growth stocks for appreciation. So we're looking for capital to grow and appreciate, and then we rebalance out of that. So I didn't want to get into too much detail, but I just wanted to talk about, maybe it's a good idea to look at your 401k or look at your portfolio if you're not working with us, or ask your advisor, am I in growth stocks? And if so, which ones am I in? Because we like to point to those growth stocks for our clients. We can show them exactly which holdings in their portfolio are growth stocks and where our projected target for those stocks are, which is pretty fun, right? So we're watching stocks, we have a price target on them, and the idea is we're looking for the stock price to appreciate to that level within the next year or so.
Yeah, and that's good when you're talking about asking what specific holdings that you hold. I think what are we in? What's the potential upside? And then really, why are we investing in this company? Because over the last decade or so, since the financial crisis, it's been fairly well documented that growth stocks have performed the best,
right,
over most other different industries and styles and everything else. The idea, though, with growth stocks is there's still a story behind each one, right? Why are these the companies that we own? Rather than, we're not just going to go try to chase whatever they're talking about on CNBC, but we want to be a little bit more tactical in choosing each position and understanding why.
Exactly. You have to be careful with that. All right, good. So now into our questions worth asking segment. Do you have a question for me this week?
I do. This isn't from a client, but it's just something that I read yesterday. And the question that I wanted to ask you is, what is the best piece of financial advice that you've ever received?
Oh, I think we answered this in an earlier episode. It probably comes from my parents early on, and nobody's perfect, but one thing that they taught me was to not argue about money. I think that a lot of relationships are ruined or ultimately sever because couples, they fight about money. So that's probably the best piece of financial advice that I've ever received, because money is a commodity. It's a means to an end. So again, same thing with finance. It's just we make money so that we can live the lifestyles that we want and do something maybe that has a greater purpose. So one of my early lessons was, like, don't fight about it, right? There's no reason to fight about it. So that's probably the best piece of financial advice that I've ever received. How did you answer that for your client? Or did you answer it?
I didn't. It wasn't something that a client asked me.
Oh, okay.
Yeah, sorry, that's what I was saying. There was something yesterday that I read it was a story in the Wall Street Journal, the best piece of financial advice I ever received, and they interviewed a bunch of finance professionals. One of them was invest in yourself, which I thought was really good. Mm-hmm. It was someone who said you should spend at least 2% of your annual income on yourself, whether it's furthering your education or whatever it might be.
That's interesting.
One was plan for unexpected events. Just because you don't plan for them doesn't mean it's not going to happen. One was for a dual income family to try to get used to living on one income.
I don't agree with that.
Not saying I agree or disagree with that.
I don't like that one.
It was good, though. This article was actually
really
good.
Do you and Cassie try to live off one income?
Not really.
Yeah, Rachel and I don't really either. I mean, I get that to a certain stance, but I don't think that's... I think advisors that say that, I don't know, it's a little bit of greed. I mean, you just need to be saving appropriately and budgeting correctly, but you don't need to live off of one income. It's ridiculous.
Yeah.
In my opinion.
One other one that was good, though, which maybe pertains to a lot of our
real quick though, to my thought on that. I mean, if both of you make six figures, you're telling me you're going to only live off 100,000, and where's the other 100,000 go? Sorry,
maybe someone wants to retire. I don't know, 40 or 45.
Yeah, but I mean that doesn't matter. You can still do that, and anyways, live off the other income. So I'd be wary of that one.
Agreed. One of the other ones was don't be a copycat. In other words, this was saying don't do what the person next to you is doing. Don't just do what your coworker is doing or follow somebody else.
That's a really good one.
You should do what's going to be best for you and figure out what that is.
And that circles back and is a reason to meet with a financial advisor, because we have a lot of clients that might even work at the same company for the same amount of time, that even have the same amount of money, but their financial plans look completely different because they have different goals. They have different objectives. Maybe one has no kids and one has 4 kids, right? Or maybe has, Maybe one has inherited money, maybe one didn't. Maybe one has a car collector and has 10 cars and one has one car. So there's so many different variables. That's a good one. Don't try to copy your neighbor. Just because somebody's doing something or living a different lifestyle than you should bear no impact on your financial plan or what decisions you are making. That's a good one.
Maybe we can link to that article in the show notes so people can see it.
Good idea, yeah, and we'll flash that up on the screen there. So that's a good one. Thanks for bringing that to the... Sorry, I missed that. I should have been listening better when you said that.
No, it's okay.
The clients. Okay. All right, so for the fun segment that I've been starting, Corey, with the guests that you've missed out on the past couple of weeks, is I started this Bird of Prey lightning round. And so we're going to go ahead and do it with you. So we've got 60 seconds to answer 10 questions. And the Bird of Prey lightning round is sponsored by Falcon Wealth Advisors. So are you ready?
I'm ready.
Okay, so we'll start the clock here. And I just want your initial quick thoughts. You don't need to take too much time. We're not going to hold you to any of your answers here.
Okay.
And there is no prize.
Okay.
All right, so ready?
Yep.
Favorite food?
Breakfast. I know
right.
that's...
Best vacation?
San Diego.
Retire when?
65.
Bulls or Bears?
Bulls.
Favorite sport?
Baseball.
KC or St. Louis?
That's a tough one. Kansas City, with the caveat of St. Louis sports.
All right, the Chiefs' record this year?
12-4.
All right, why'd you pick finance?
I was intrigued by how different it was and all of the different opportunities that existed there. And
Stocks or bonds?
Stocks.
And what's the number one piece of advice, this doesn't have to be financial related, that you would give someone?
Good processes lead to good outcomes.
All right. That's a good one. Good processes lead to good outcomes. All right, perfect. So you won nothing because there is no prize.
Well, that was fun.
But thanks you again. Thank you again for entertaining. Again, the Bird of Prey lightning round sponsored by Falcon Wealth Advisors. Before we do wrap up for today, I did want to make another announcement that you'll be starting your own podcast.
I will.
And so why don't you tell our listeners about that? You're not leaving Falcon Wealth Advisors, and you're not leaving our show. You definitely still be part of our show. But we figured that we have so much fun with these that there's so many other people out there that you and I know that we can bring onto our shows that you wanted to start your own. So why don't you talk a little bit about what you're starting and when everyone can, and when and how people can find that?
Sure. So first off, the podcast that I'm going to start hosting is going to be geared toward my alma mater. A lot of people know that I graduated from the University of Central Missouri. When I was there is when I met you, how I ended up in this industry.
Well, that's in Warrensburg, right?
It is.
Do you have any fun facts about Warrensburg?
Not off the top of my head.
No?
I need to probably be a little bit more prepared to answer that question.
What's the big bar street on what's it?
Pine Street.
Pine Street, right? And how many students were enrolled roughly when you were there?
Around 14 or 15,000.
Okay, so decent sized school. And what are they, Division II?
Division II. They are in the MIAA conference, so they play against schools like Northwest Missouri State, Washburn, Emporia State.
And they have a big, I guess they have a big Kansas City presence along with St. Louis. Basically, a lot of their students are from Missouri, I would assume, right?
Yeah, a lot more of them are from Kansas City, and they actually have a lot of students that are from really rural areas in Missouri. They're actually trying to make a little bit more of a push over the last several years in recruiting more people from St. Louis. Because when I actually, growing up in St. Louis, went to school there, that was a little bit of an oddity. A lot of people went to Mizzou and Columbia, or they went to Missouri State and Springfield.
What about Illinois? Did you have a lot of?
There was some, not a lot, but
Gotcha.
there was several people I knew that went there.
And you guys have the worst mascot of any college.
That's your opinion.
School, the mules, right? It's a bright red mule.
That's right. The Missouri mule though was a symbol of strength and integrity and tenacity.
A mule?
Yeah.
All right.
It used to be a very prized animal.
Okay, fair enough. So do you have a name for the new podcast yet? I know we're getting ready to wrap all that up.
So what the podcast is going to be called is Central Missouri Alumni Stories. And what I'm going to be doing is bringing on other alumni, just really to talk about sort of what led them to Central Missouri State, University of Central Missouri, whichever name we want to go by here. Really, what did they enjoy there? How did that prepare them for the real world, kind of making that transition? What did they do in their career? And then ultimately, what's next?
Gotcha. So people that have gone to school, graduated, had successful careers, and now they're looking for that next chapter, meaning typically retirement.
Exactly.
Right, perfect. So if you're listening to this and you graduated from Central Missouri, or you know anyone that would like to be on a show, certainly reach out to Corey, and he's lining up his guests, and you're probably going to do maybe, 2 a month?
That's where we're going to start it at.
Yeah.
And we're recording the first episode next week.
Yep, perfect. So you can find Corey's episode. We'll probably be putting it on Falcon Wealth Advisors website, so definitely you can see links to it there. Corey, you can find Corey on Twitter at...
Yeah, my Twitter handle is at Corey Bittner KC. My email is Corey at Falcon Wealth Advisors. We'll make sure that we have it out there so people can find it through whichever their preferred medium is.
Yeah, and so we'll probably be putting it also on our YouTube channel. So, again, you can find this show on our YouTube under Upticks. We're going to rebrand that Falcon Wealth Advisors Collective. So you'll be able to see all of Corey's videos and all of Upticks all there in one spot. And then I'm sure you'll have your own podcast on iTunes where people can subscribe to that and listen to that. And you'll be rolling that out more and more, and we'll be talking about that.
Exactly. So if you're listening through Apple's podcast, Spotify, that's where I listen to a lot of podcasts, or if you're watching on YouTube, you want to make sure that you subscribe to each of those different places. That way you're getting the updates and seeing that as it becomes available, so you don't have to worry about thinking about going to look for it or missing something.
Yeah, it's perfect. Yeah, and as certainly you can follow us on all the other social media platforms. So we're on Instagram, Facebook, LinkedIn, and Twitter. Thanks again for tuning in. As always, we all hope you all have a great week, and thanks again.